Okay, we are dealing with company accounts. Company accounts, introduction, types of company accounts, and preparation and presentation of company account. So these are the areas that we are covering in company account. So we start with the introduction. The companies, according to Companies Act, are supposed to prepare their financial statement. The financial statements are prepared to show the performance and the financial position of the company over a given period of time. The preparation and presentation of company account must be according to the Company Act. Types of accounts to be prepared, they include 1. Income statement. Other version will give you as profit and loss account. 2. Profit and loss appropriation account. 3. Balance sheet stroke statement of financial position. So we start with the first one. We deal with the preparation of profit and loss appropriation account. Now what I know you know. You know how to prepare the trading profit and loss account. You know how to prepare the balance sheet. Now what is foreign is profit and loss appropriation account. Now what is profit and loss appropriation account? The account is prepared to show the adjustment of corporate tax, dividends, and reserve transferred out of profit generated in a company over a given period of time. Now, the format. You have the company name, profit and loss appropriation account for the year ended, net profits, you less corporate tax, you get the net profit after tax, you less reserves, you get net profit before dividends, you less dividends, you get retained earnings. You add retained earnings for the previous year, which is the past year. You get retained earnings for the current year, which is the new year. Now, we have a question, and this question requires us to actually prepare the company account. So if you look at it, these are the details of the information in the transaction. The following is the trial balance of justice as at 31st March 2019. Now these are the information. In additional information, we have the following one: depreciation of plant by 15%, written off shillings 5,000 from preliminary expenses, half-year debenture interest due, create 5% provision on doubtful debts. 5. There was no disposal of assets. 6. Stock on 31st March 2009 was shillings 950,000. A claim on shillings 25,000 for workmen's compensation is being disputed by the company. The corporate tax provided at 30%. The director proposed to declare a transfer of reserve shillings 10,000. You are required to prepare the company financial statement. So this is actually the nature of the question you expect in the preparation of company account. So number 1, we need to actually prepare the income statement. So the solution for our income statement, we have, number 1 thing you need to do is write the name of the company, which is called Justice Company. 2, the type of account, which is trading account or income statement. 3, for the year ended at 1st March 2009. Then sales. Our sales was 4,150,000. You less return inwards, which according to the question, it's not there. What you get is net sales, which is 4,150,000, less cost of goods sold, which How do you get the cost of goods sold? You say stock opening 750,000, add purchases 1,850,000, add carriage inwards, which is not there. Goods available for sale is 2,600,000, less stock, which is 950,000, less return outwards, which is not there. So our cost of goods sold is worth 1,650,000. So when you say net sales, which is 4,150,000, less cost of goods sold, which is 1,650,000, you get gross profit, which is 2,500,000. Add any other income. As far as our question is concerned, there is no any other income. So you get net income, which is worth 2,500,000. Less expenses. Number one expense is preliminary expense, which is written off 5,000. Then wages 979,800. Add general expenses 68,350. Add sales salaries 202,250. Add bad debts 21,100. Add debenture interest 360,000. So the 12% of 3 million is 360,000, which is our debenture interest. Depreciation of plant 15% of 3,300,000 gives us 4,495,000. Add provision for bad debts, which is giving us 8,500. Now total net income is 2,500,000 less expenses, indirect expenses, which is 2,140,000. What you get is net profit, which is 360,000, which is called net profit before tax. That brings us to the end of income statement. Now, can we prepare the profit and loss appropriation account? Again, we have the company name of the company, profit and loss appropriation account for the year ended 31st March 2019. We have net profit 360,000 less corporate tax. 30% of 360 is 108. Net profit after tax is 252,000 less reserves 10,000. You get net profit before dividends, which is 242,000. When you less dividends, which is 392,500, what you get is retained earnings worth, it's a loss, which is 150,500. You add the retained earnings for the previous year, which is 262,500. What you get is our new retained earnings, which is 112,000. After getting the net profit or the retained earnings, now we prepare our balance sheet. Our balance sheet is Justice balance sheet as at 31st March 2019. Here we have the goodwill 250,000, premises 3,072,000, plant 3,300,000 less depreciation 495,000. You get 2,805,000. Total fixed asset is 6,127,000. Current assets, we have stock, we have debtors, we have bank, we have preliminary expenses. After written off, we have 45,000. We have calls in arrears 75,000. Total current asset is 2,303,000. Current liabilities, we have creditors 400,000. Bills payable 370,000, and paid interest 180,000, and paid tax 108,000. When you total, you get 1,058,000. Now what you do, you say total current asset minus total current liabilities. When you less, you get 1,245,000, which is called net current asset. When you total fixed asset plus net current asset, you get what we call capital employed, financed by. Capital 4 million, Retained earnings 112,000 from our profit and loss appropriation account. And then we have general reserve. It was 250 plus 10,000, 260,000. You add, you get what we call equity capital, which is 4,372,000. There is debt capital, which is debentures, 3 million. When you total, you get capital employed, which is giving us 7,372,000. Thank you so much, and do see you in the next lessons.